oil as usual. And remember, we always have similar scenario with that which we have on the US oil. And you can see what has been happening since the beginning of the week. We've been profitable on this one. You can see that price has respected that key level, broke out of that key level, retested our key level, and boom, we had a move to the upside. So price is currently oscillating right at around $118. Just like what we had on the US oil, we can see that the supply zone has finally been broken to the upside. We had a supply zone here. If we look left, we can see that this area at $115 has been a supply zone for 3 months thereabout before we saw the breakout of that structure during the later part of May, and we saw a retest of structure to push price further to the upside. However, we had a breakdown of that area during the mid part of the month of June, and we saw price going to the downside. Now we have a breakout above of that supply zone, and I'm of the opinion that since we have a breakout of that supply zone, we'll be looking forward to a bullish momentum. It just tells us how strong the buyers are at this juncture in the market. So we might be looking for a retest of structure, after which a trend continuation could happen. So to be more specific here, we do have a key level that will guide our actions going forward, and that is that on the we have the $116.50 area, which at this point shall guide our actions going forward. And we also have the bullish trend line, which is the green line on your screen, which I'm going to extend right now. And we want to be looking forward to price coming down into that bullish trend line, after which we look for patterns that supports trend continuation to the upside. So the only thing that's going to negate our bullish bias on this UK oil is that if we see price breaks down that bullish trend line, that is this bullish trend line here on the hourly time frame, and the bullish trend line we drew on the daily time frame. So if we see a breakdown of this area, then definitely we want to be thinking of a selling bias after a retest of structure happens. However, the way structure is right now, I'm not sure that is going to happen, so we continue to think of a bullish bias on this pair. For the sake of clarity, let's go to the daily time frame and let me show you what I mean by that bullish trend line we identified on the daily time frame. So you can see that this bullish trend line has been respected since the December last year, and you can see that at no point in time did price break below that bullish trend line. So you can see price has been oscillating right above that bullish trend line in the last 7 to 8 months, and we are right back in that area. However, price was pushed further up to break the supply zone I showed you on the 1 hour time frame. So I'm looking forward to price continue to respect that bullish trend line to the upside on this one. So that is what I'm trying to explain to you about the bullish trend line. So what I'm looking out for here going into the New York session is that we look out for those who have missed this move from the above the key level at $112. For those who have missed that move, then we might be waiting for price to come into either of these bullish trend lines, where we look out for patterns on lower time frame to join the trend continuation to the upside. So we could be looking at previous structure as our take profit target, that is between the 120 and the $122 as our take profit target here on the UK oil. So this is my scenario here on the UK oil. I'll be giving 10 seconds, 10 to 15 seconds to glance through the comment section. If you have questions regarding the UK oil, feel free to drop it in the comment section and I'll be willing to be of help in that regard. So I'm watching. 603, good morning. 346, hi. 249. Well, I'm not sure I understand that language you just typed in. Is that a language or? All right, so I'm waiting for any comments regarding what I just talked about. We got all on. All right. In the absence of none, so let's move on to the next pair. So during the course of yesterday's session, we